Both Nvidia and Palantir are chasing $200, but here's what no one's telling you. One of them follows a repeatable pattern that's built million-dollar fortunes. The other is a hype-fueled wildcard. I've been riding one for 2 years, the other, I'm still watching. In this video, I'll show you the breakout signal 99% will miss and how to avoid the trap that costs investors millions. Let's start with historical performance. Palantir, of course, is the newer of the two to the stock market, with its direct listing in September 2020. Nvidia, on the other hand, had its IPO all the way back in the 90s. That age gap makes a significant difference when you're looking to make a serious investment, a point many overlook. Now, why is that? Well, people often ask me what good investing looks like. My answer tends to surprise them. They picked up a lot of ideas over the years that sound smart at a dinner table, but well, don't make any money. The real answer is pattern recognition. If an asset has consistently performed well in the past, odds are it'll continue to do that going forward. That makes it a high probability opportunity. On the flip side, a stock without much history or proven trends is higher risk. Makes sense, right? So the more history a stock has, the more we have to study in terms of performance and potential performance. Now, Nvidia's history shows 3 massive uptrends: 650% between 2016 and 2018, 1,000% between 2018 and 2021, and 1,200% most recently between 2022 and 2024. Now, here's what's key. All 3 of those moves had one repeatable setup. And right now, that setup is forming again. I'll show you exactly what to look for and why most people won't spot it until it's too late. But first, let's take a look at Palantir. Compared to Nvidia, its history is, well, pretty quiet. But that's to be expected. Palantir only hit the stock market in 2020, just 5 years of data versus Nvidia's 25+ years. Since its listing, Palantir mostly moved sideways, typical for a new stock, and only broke out in November 2024. Nvidia, for comparison, spent its first 16 years in a sideways phase. So the fact that Palantir is showing signs this early is actually promising, but it's still early days. Since that November breakout, Palantir has climbed 180% and hit all-time highs. But unlike Nvidia, this is Palantir's first real uptrend at these levels. So there's no roadmap. It might go smoothly or it won't. No one knows. The recent 47% drop, triggered partly by Trump's tariffs, followed by a 90% recovery, tells us something. Wild swings may be baked into the Palantir ride. And that's exactly why it's the higher risk option of the two. These swings are part of the trend structure. A 47% drop followed by a 90% recovery tells you one thing. This stock's future could be explosive or punishing. That kind of volatility is what makes Palantir high risk. Not because it lacks potential, but because its path is completely unpredictable. Now, I mentioned there's a trap that almost every new Palantir investor walks into, and I'll break that down shortly. But first, let me take you inside the investment I've actually been riding for over 2 years, and why the next move might be even bigger. I've held Nvidia since the start of 2023 and plan to add more into my portfolio. Our private community has had multiple opportunities to ride this trend with me, calmly, confidently, and well, without the noise that we're bombarded with. In a minute, I'll walk you through the exact setup I waited for before entering and why skipping that one step has cost other investors millions. But first, a pro tip for you. I only invest in stocks with at least 5 to 10 years of price data and a clear history of smooth uptrends. Anything else gets cut. This is part of a structured process I follow week in, week out. If you're done guessing and want a repeatable system, I've linked our stock market blueprint in the description below. Palantir hits the 5-year threshold this September. However, if you're eager to buy into it before then, stay tuned. I'll show you how to approach it smartly and the common mistakes to avoid. Now first, back to Nvidia. It's met my criteria in early 2023. Since then, it's up 1200% and went through a 10-to-1 stock split. It's turned Nvidia employees into millionaires, some several times over. I remember looking back at the chart in early 2023 thinking, this looks just like 2016 and 2018. Now, let's talk about opinions for a second. Cathie Wood famously dumped her Nvidia shares just before that 1200% move in 2023, claiming Nvidia had no legs. That call cost her investors billions. One of the first rules of investing, ignore opinions, including your own. Follow the chart. Lately, analysts and influencers have come out swinging, saying Nvidia is done for, a $3 trillion tech behemoth brought down by DeepSeek and tariffs. Really? That's the narrative, but it's definitely not the trend. What is actually happening? Nvidia is in a sideways phase. It's held at the $100 level without a single monthly close below it since June last year. That round number is acting as a rock-solid support level. And this type of consolidation, totally normal after such a big run. Every major move is followed by a breather. For example, here's Microsoft after a 5-year trend between 2016 and 2021. Sideways. Visa after a 9-year trend between 2012 and 2021. Again, sideways. CBOE after a 5-year trend between 2013 and 2018. Again, you guessed it, sideways. What comes after sideways? The next uptrend. Nvidia is showing the same signs. It's bounced over 50% off the April low and reclaimed its daily 200 simple moving average, giving it a bullish bias. Swings are normal in a sideways market. That's the whole point of them. Expecting anything else is, well, just setting yourself up for frustration. What's needed here isn't fear, it's patience. Because while every loud voice is shouting the market top and an AI bubble, what's really happening is that pressure is building. Think of it like a spring coiling tighter and tighter. And then when it finally uncoils, it moves fast. And most people miss it, distracted by clickbait predictions of doom and gloom. Well, do we expect anything less from the media? Remember how I said Nvidia could be another 1000% bagger? Here's why I'm serious. Its last 2 trends each did 1000%, hitting $1,000 per share. Now, with the 10-to-1 stock split that happened last year, most investors can get in. That increases volume, and when volume lines up with trend structure, price action follows. What confirms the start of the next big move? A clean break and close above the all-time high from January 2025. That's our signal. That's when Nvidia will move out of this sideways market and when I'll start adding more into my portfolio. Now, Palantir is actually leading Nvidia this year. New highs, breakout territory. The next breakout is your entry. If you're going in, start small. Use a wide stop loss. This stock is a day trader's playground. Volatility is the norm. Palantir could be a big winner, but how it gets there is anyone's guess. As the crypto bros say, hodling required, but a potential to the moon. Personally, I'm happy to sit this one out. There are better, lower risk setups right now on stocks with a proven performance history. Okay, so that's the technicals. Now, let's talk about the catalysts. What's driving both of these stocks towards $200 and what could, well, derail them? Nvidia remains the dominant force in AI infrastructure. Its GPUs, especially the H100 and upcoming Blackwell B100, are powering the most advanced AI models. Microsoft, Meta, Google, they're all spending billions on Nvidia hardware. Over 60% of Nvidia's revenue now comes from data centers. Margins remain above 70%. Free cash flow, $14 billion per quarter. Palantir, on the other hand, has gone from GovTech contractor to commercial AI contender. In 2025, it's riding the AI wave with Foundry and AIP, tools that let enterprises roll out AI across operations. CEO Alex Karp has a bold vision. but Palantir still has hurdles. It's surged almost 2,000% since its 2022 low, but it's volatile. Retail hype, social media, and options traders dominate the tape. Privacy concerns from surveillance deals still hang over the brand. Its commercial side, while growing, isn't yet proven at scale. It's competing with giants, Microsoft, Snowflake, and dozens of hungry startups. And with a stretched valuation, even a slight earnings miss could trigger a sharp drop. Nvidia didn't hit $3 trillion by accident. It followed a repeatable pattern of breakout, consolidation, trend, repeat. Palantir is still writing its first chapter. Now, if you want to build real wealth in the markets, stop chasing headlines. Start following the setups that actually work. That's the theory, but theory is everywhere. Execution, on the other hand, that's where the money is, and very few get that part right. So the next step is crucial. Watch this video on everything you need to profit from stocks. It walks you through how I find high probability setups, manage risk, and grow a portfolio that compounds year after year. No predictions, no hype, no influencer noise. If you're serious about turning this into a long-term game that works around your lifestyle, this is where it starts. I'll see you in the next one.